Cryptocurrency. It's the hot buzzword of the investing world these days. But what is cryptocurrency really? Cryptocurrency is a different type of digital money, and they're trending everywhere you look. But what are cryptocurrencies? How do they work? Are they worth investing in? To find out, keep on watching this video. Hey guys, welcome back to Crypto Animations, the channel where we explain to our viewers the different types of cryptocurrencies and everything new investors should know. In today's video, we will talk about what cryptocurrencies are. So be sure to be attentive, because you clearly don't want to miss out on an amazing opportunity to win a giveaway of a $25 crypto coin of your choice. Also, if you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Now with the intro out of the way, let's get into our topic for today. A cryptocurrency, or crypto, is a form of payment that can circulate without the need for a central monetary authority such as a government or bank. Instead, cryptocurrencies are created using cryptographic techniques that enable people to buy, sell, or trade them securely. Cryptocurrencies can be exchanged for goods and services, though they often are used as investment vehicles. Cryptocurrency is also a vital part of the operation of some decentralized financial networks, where digital tokens are an essential tool for carrying out transactions. The most famous cryptocurrency, Bitcoin, has had a historically volatile price. In 2021, it hit an all-time high above $65,000 before falling back. Most cryptocurrencies have a finite amount of tokens, which is a unit of cryptocurrency. This is what drives up the value of a cryptocurrency, as the more people invest in them, the fewer there are. Cryptocurrencies operate via decentralized control. This means that they aren't regulated by a bank or government, as traditional currencies are. The decentralized control in the context of cryptocurrency is called the blockchain, a series of blocks of data that act as a record of all the transactions that have been made. All of these blocks are interconnected, which gives it security. If you were to try and hack into one block, it would affect all the others. You can read more about blockchain technology here. There are currently many different cryptocurrencies, and they have relatively minor differences. For example, Ethereum processes transactions much faster than Bitcoin, while Cardano is more environmentally sustainable. There have also been many joke cryptocurrencies, most famously Dogecoin, which is still struggling to reach a value of $1 on having an effectively limitless supply. Cryptocurrency is exchanged from person to person on the web without a middleman, like a bank or government. It's like the wild, wild west of the digital world, but there's no marshal to uphold the law. Here's what we mean. Have you ever hired a kid in your neighborhood to mow your lawn or watch your dog while you were out of town? Chances are you paid them in cash. You didn't need to go to the bank to make an official transaction. That's what it's like to exchange cryptocurrencies. They're decentralized, which means no government or bank controls how they're made, their value, or how they're exchanged. You store your cryptocurrency in a digital wallet, usually in an app or through the vendor where you purchase your coins. Your wallet gives you a private key, a unique code that you enter to sign off on purchases digitally. It's mathematical proof that the exchange was legit. Cryptocurrencies use something called blockchain technology. A blockchain is like a long receipt that keeps growing with each crypto exchange. It's a public record of all of the transactions that have ever happened in a given cryptocurrency. If you're more accustomed to traditional brokerage accounts, there are a few online brokers that offer access to cryptocurrencies as well as stocks. Of the online brokers reviewed by NerdWallet, these include Robinhood, Webull, SoFi Active Investing, and TradeStation. If you're looking for an exchange that operates solely within the cryptocurrency world, look for pure-play crypto exchanges. These platforms, such as Coinbase, Gemini, and Kraken, won't give you access to core assets like stocks and bonds. Still, they typically have a much better selection of cryptocurrencies and more wallet functionality. About 16,000 different cryptocurrencies are traded publicly, according to CoinMarketCap.com, a market research website, and cryptocurrencies continue to increase. The total value of all cryptocurrencies on December 23, 2021 was about $2.3 trillion, having fallen off an all-time high above $2.9 trillion weeks earlier. Most people still see cryptocurrencies as an investment, but cryptocurrencies is quickly gaining speed and becoming more widely accepted as currency, and that could become even more popular as these cryptocurrencies keep gaining trust. Some major retailers like Whole Foods, Nordstrom, Etsy, Expedia, and PayPal are now letting people pay using crypto, and any two people who value the tokens can exchange them for goods or services with each other. And let's not forget the whole cryptocurrency digital art craze called NFTs, where you buy digital art with digital money. People invest in cryptocurrencies for a variety of reasons. Here are some of the most popular. Supporters see cryptocurrencies such as Bitcoin as the currency of the future and are racing to buy them now, presumably before they become more valuable. Some supporters like the fact that cryptocurrency removes central banks from managing the money supply, since these banks tend to reduce the value of money via inflation over time. Other supporters like the technology behind cryptocurrencies, called blockchain because it's a decentralized processing and recording system and can be more secure than traditional payment systems. Some speculators like cryptocurrencies because they're going up in value and have no interest in the currency's long-term acceptance as a way to move money. Before you say goodbye to your dollars and hello to Bitcoin, Ether, or Doge, there are a few things you need to know up front. Cryptocurrency is unstable. Crypto's value swings way up only to come plunging back down, and you never really know what you're going to get each day. The value of cryptocurrencies goes through extreme ups and downs. There's no denying that some are hot right now, but for how long? Someone sneezes and the price drops. Investing in cryptocurrency is risky. Cryptocurrency has a lot of unknowns. There's still a lot that needs to be ironed out with how cryptocurrencies work. Think about it. Nobody even knows who the founder of Bitcoin is. Only a tiny percentage of people understand the system and know how to operate it. Ignorance makes you vulnerable. We always tell people that if you can't explain your investments to a 10-year-old, you have no business investing in them to begin with. Cryptocurrency makes fraud easier. All it takes is 5 minutes on the internet to know not everyone has your best interests at heart. Scammers will stop at nothing to get access to your personal information and passwords, even your bank account. And cryptocurrency makes it that much easier for them. Cryptocurrencies have an unproven rate of return. Trading in cryptocurrency is kind of like gambling. Because it's exchanged from person to person without any real regulations, there's no pattern to the rise and fall of its value. You can't figure out the changes or calculate returns as you can with growth stock mutual funds. There just isn't enough data or enough credibility to create a long-term investing plan based on cryptocurrency. Don't play poker with your financial future here. Some people believe cryptocurrencies could replace regular currencies within 5 years. Those involved in crypto argue that they will democratize currency by getting around the reliance on banks. On the surface, anyone with access to a computer can mine for cryptocurrency, and with the current value of a single Bitcoin set at $34,000, anyone can become very wealthy. Cryptocurrency transactions are usually processed in a matter of minutes, unlike bank transfers that might take days. The person involved and details of the transaction remain relatively anonymous. Cryptocurrencies may go up in value, but many investors see them as mere speculations, not real investments. The reason? Just like real currencies, cryptocurrencies generate no cash flow, so for you to profit, someone has to pay more for the currency than you did. That's what's called the greater fool theory of investment. Contrast that to a well-managed business, which increases its value over time by growing the profitability and cash flow of the operation. For those who see cryptocurrencies such as Bitcoin as the currency of the future, it should be noted that a currency needs stability so that merchants and consumers can determine what a fair price is for goods. Bitcoin and other cryptocurrencies have been anything but stable throughout much of their history. For example, while Bitcoin traded at close to $20,000 in December 2017, its value then dropped to as low as about $3,200 a year later. By December 2020, it was trading at record levels again. Well, guys, that's all we have for you today. What are your thoughts on cryptocurrencies? Let us know in the comment section down below. If you guys like this video, then be sure to give this video a big thumbs up. Also, if you don't want to miss out on any new future videos, then be sure to click on the subscribe button and turn on the notification under this video so that you're notified the next time we upload a video on the latest cryptocurrency news. Thanks for watching. We hope you have a great day today, and as always, we'll see you in the next video.